Curtis is a personal finance expert and owns Much Money Consulting. This is his first month of operations, and William has hired you to do his accounting. The following transactions are for the month of October. On October 2nd, William Curtis invests $32,600 cash into his business. So if we just consider, there's a few steps we take to analyzing transactions. So the first step, let's just, before we even look at the answer below us, what is the accounts that are being used? Cash is going to be used, and he invests it. So what is it when an owner? Yes. So cash, owner's capital. So those are the two accounts we know we're going to use after analyzing it. What happens to each one? Does cash go up or does it go down? Does owner's capital go up or does it go down? It goes up. How do you make cash go up? What type of account is cash?
Asset.
It's an asset. And what makes assets go up? Owner's capital. What type of account is owner's capital? Credit. And what makes credit go up? Or what makes or equity go up? Credit? So, when we take a look at our journal entry, October 2nd, cash, debit, $32,600. Capital, $32,600. And then our note, we have an investment by owner. So the first one has been done for us. So, let's take a look at the second one. On October 4th, purchased $925 of office supplies for cash. So what accounts are we using here?
Office supplies and cash.
Office supplies and cash. What type of what is the office supplies doing? Is it going up or is it going down?
Up.
And cash?
Down.
What type of account is office supplies?
Asset.
And so what makes assets go up? What type of account is cash?
Asset.
What makes cash go down?
Credit.
So we can put it into our general journal, which is on the next page. So we start with our date, October 4th. Now our debits. So here it's office supplies. Are always flush to the line. Our credits always are indented. See how I indent my cash? Now debit is $925. They spent $925. And cash, $925. So to finish this, we just need to put an explanation. So, yeah, purchase. Usually, if this was a real business, you would add something like invoice, whatever, 77, what you know, you'd put something with a little more information, just because we obviously know we're purchasing office supplies for cash just by looking by the accounts. We just don't have any. We might put the vendor and the invoice number just to make it so when you're going back and looking at your records, you know exactly which invoice to grab. So let's move on to the next one. On October 6th, purchased $13,600 of office equipment on credit. $13,600 of office equipment on credit. So, what accounts are being used here?
Equipment.
Office equipment
Yep.
and
Accounts. Accounts payable.
accounts payable. Yep. When you see on credit, that means accounts payable. Now, is your office equipment going up or is it going down?
Up.
Right, because we're purchasing it. We have more than we did on October 5th. Our accounts payable, is it going up or is it going down? We have a larger liability than we did yesterday. Do we owe more money today than we did on October 5th?
Yeah.
Yes, so our liability is going up. Our accounts payable is going up. What type of account is office equipment? And what makes assets go up?
Debit.
What type of account is accounts payable? It's a liability. And what makes liabilities go up?
Credit.
There we go. So we can do this one. So leave a space. You should always leave a space. So October 6th, what we're debiting is office equipment. We'll be crediting accounts payable. The amount is for $13,600. To purchase so this is what I'll be looking for in your exams. The date, your debit accounts on the left side. Now let's say you make a mistake and you find a third account. You don't need to scratch the whole thing out. You can just put your new debit on this side. You know, if that's good, you go debit, cash. Oh, there's a third account. Just put it back here and continue on. That's okay. So I'm going to look for the date, the proper accounts. So you have to get the right account codes. We're not given a chart of accounts. A lot of these you just have to use your best guess on what they'd be called, which we're doing here. You need to put a description and you need to have the amount correctly put in.
What's the PR slot for?
This is a page reference. So if we were doing this like the olden fashioned days, we'd have what's called the general ledger. So this is our general journal. Our general ledger would look similar. It would just be cash instead of accounts. So it would just be cash, and we would go purchase office supplies, credit $925, and owner's investment, whatever it would be. Would just only line up our cash transactions. That way we could have a cash balance. In today's day and age with accounting software, general ledgers are pretty much dead now. It just auto tabulates when you do these general journals. But basically, you could have a whole book of ledgers, and you just need to reference which page you ended up putting it on. And this was also a check that you actually entered in the ledger. So it used to be sort of a two-part accounting process. You'd put it in the general journal, and then you'd open up the general ledger, you'd enter it in, and once it was entered, you would mark it down here so you knew you did it. Yeah. Otherwise, your cash balance would be wrong at the end of the year. You'd be going back to the entire book, which would be like this thick of handwritten journal entries. So on October 10th, we received $3,000 cash as revenue for being a guest on a TV show, City Talk. So which accounts are being used? Is cash going up or down?
Up.
Revenue up or down? Type of what makes cash go up? What makes revenues go up? All right, we can go ahead and do it. So October 10th, we've got cash revenue on October 12th, paid for the office equipment purchase and transaction C. So which accounts are we using here?
Liabilities or accounts payable?
Yeah, we'll have accounts payable. And what other account?
Assets, cash, office.
Cash. So do we have any more office equipment on October 12th than we did the day before? Any less? So it doesn't change. When we pay for a bill, what do we pay with? Cash, right? And when we pay off our bill, so our accounts payable, we're paying off our accounts payable with cash. So would we, how do we make is our accounts payable going up or down? Down, because we owe less than we did the day before. And how do we pay bills? With cash, and does that make our cash go up or down? So how do we make accounts payables or liabilities go down? Yeah, we would debit. How do we make our assets go down? So we can go ahead and do that. October 12th. Accounts payable, cash. The amount was for $13,600. On October 16th, billed a customer $5,400 for delivering a corporate workshop on smart investing. Which accounts are being used?
Accounts receivable, cash,
Accounts receivable. Why accounts receivable? Why not cash?
because you billed them and they haven't paid you yet.
Yeah, it says nothing about receiving cash. We've just billed them. And what else? What else? What other account?
Liabilities?
What did you do? What did William Curtis do in this? He did some work.
Yeah.
So what is that?
Revenue?
Yeah. So did our accounts receivable go up or down? Yeah. Because we now have more money owed to us than we did yesterday. Has our revenue gone up or down? Yeah. Because we did work, we did build, so we've done more work. So what type of account is account receivable?
Asset.
And what makes assets go up?
Debit.
And what type of account is revenue? Revenue. What makes revenues go up? So, October 16th, we had accounts receivable and revenue for $5,400. and an explanation. On October 18th, paid October's rent for downtown office with $3,500 cash. Which accounts are we using?
Cash.
And what did we pay with our cash?
Rent expense.
Yeah, so
Expense.
and did cash go up or down?
Down.
And did rent expense go up or down? Up. We paid more to rent
Yeah.
today than we did yesterday, total. So it's gone up. So what makes cash go down? And what makes an expense go up? Debit. Debit. So we've got rent expense. Cash. Paid. Oh, paid October rent. On October 26th, collected cash for all of the account receivable traded in transaction F. So you said which account, sorry?
Cash. Account receivables.
Okay, and does cash go up or down?
Up.
Right, because we're collecting cash.
Yep.
And does accounts receivable go up or down? Down, yeah, because we're cashing in our money owed to us for cash. So they're both what type of account? And debit makes assets go up and credit makes assets go down. Oops. The amount was from F, it was for 5,400. So on October 31st, withdrew 5,000 cash from the business for a trip to Hawaii.
Withdrawals.
And cash, you said? So is cash going up or is it going down? And so withdrawals is going up, but it's kind of, this one's a little tricky because it's actually equity. So when withdrawals goes, it's kind of like a little confusing because when withdrawals goes up, the equity goes down. So this actually will bring equities down, if that makes sense. Just, it's hard to, because this is basically the balance of the account of the capital.
So withdrawals are always gonna make equity go down?
Yeah.
Essentially, so you
Yes.
can always just know if withdrawal is gonna mean equity.
Exactly.
Okay.
So credit for cash because it's going down. We're going to debit our withdrawals, or owner's withdrawals, whatever you want to call it. So owners I mean, I guess I could kind of explain this to you now. We're gonna get into it in chapter 4, but this would be like a contra equity account where the balance is held different from what the normal balance is. So if you think of this as equity, it's going down. If you think of this as a contra equity account, which it is, but you haven't learned about, it's going up. Either way, we're gonna debit it for now. And I'll get into that a little more chapter 4 when we look at depreciation. So we've got all of our transactions.